Good day to one and all. This is Dr. Sivaraman of iknowindices.com. We are into the new month, the month of August. So we are on 1st of August. Between 5 and 5:30 GMT, I'll explain to you the Asian session live market analysis and the forecast, giving the expected market moves for all the 3 sessions of the days of this particular week, Monday to Friday. Besides, the range in which the currencies are expected to swing in this week are also given during this webinar. Also, I will explain to you how exactly the market reading has to be done with the help of the initial lows and the highs, which are noted down around 3:30 GMT, and compared during that of the day to find out what is the intention of the player, so that accordingly we can plan our trades. Also, with the help of the live market code page, we just identify what sort of moves they are doing it in the market. So currently, if you look into that of the live market code page, you find that net change in the case of Euro, USD, GBP, Australian dollar, and also Canadian dollar, they are all in positive net change, excepting a nominal negative net change in the case of USD CHF, which indicates that the players are handling the crosses to start with. So week beginning, they are expected to make the week beginning false move, and later on during this particular week, they are expected to make volatile moves and then rise. So let us see how exactly the expected market moves are shown for this week by the algorithm. So I will explain the derived algorithm to start with. Then later on we'll do the market reading by comparing the current market level to that of the initial lows or the highs. So this is a sheet explaining the session-wise forecast for this particular week, Monday to Friday, that is 1st of August to 5th of August. This is the month beginning time, so the players are expected to make the trend reversal moves. Why they should make the trend reversal move during that of the month end and the new month beginning time? Because the traders take several types of positions, namely the spot market, forward market, then futures market, etc. So the players handle all those markets, and especially during that of the month end and the month beginning time, they handle the forward as well as that of the futures market or the derivative market. So when they handle the derivative market, invariably they have to make very big upward and the downward move in order to close negatively the positions of the traders. So that is why they make very big moves during that of the month end time. During that of the month beginning time, they create the market sentiments and act against that of the traders. By that, they are exactly able to make a very big move, induce the traders to commit wrongly the positions, create bearish feel in the case of Euro and GBP as well as USD, induce the traders to take sell positions. Later on by month end, they just do exactly opposite move. As a result, those who have taken the positions in the forward cover and also in the derivative market, they close the positions with loss. So this is the way the players earn money from that of the people who are trading in derivative market, and also those exporters and the importers, they go in for that of the forward cover. So the expected market moves for this particular week, Monday today, swing and firm up during that of the Japanese session, and then swing and rise during that of the European session, and then swing and firm up during that of the US session are the expected moves. Then tomorrow, 2nd, they are expected to make a dip during start of the Japanese session, and then firm up, and then swing and slide during the European session, and then firm up during that of the US session. Nominal upward move could be seen. Then day after tomorrow, they are expected to make the swing and slide during the midweek, and then swing and rise during that of the European and the US session. And on Thursday, they are expected to make the either way stop-ins, dip and rise, then swing and slide, then swing and rise move. Then on Friday, they are expected to make a swing and slide to start with to induce the long holders to liquidate the long positions and then try to gain the levels during the European session for the non-farm payroll and then continue to gain the levels during that of the US session. Next week, second week, from 8th to 12th August, they are expected to make the trending moves. So swing and more rise moves are expected in the market. So basically the players are expected to make volatile moves during this particular week. Either way stoppers they are expected to create the confusion to the other traders. The market might be bullish or bearish, and then the traders commit either way the positions, and later on the players try to make the whipsaw moves and earn from them. So basically we need to understand when they are going to drop, when they are going to rise, by reading their intentions. All quick moves are false moves, and whenever they make the intentional move, that will be alternated with it of the extended move. That will be a quick move. So if the intentional move is on the downside, then extended move will be a very quick upward move. If the intentional move is on the upside, slowly gaining the levels for 2 sessions, then the extended move will be on the downside, opposite to that. So watch that carefully. We'll be able to really focus on the type of trades, what I recommend. Then you'll be able to easily earn money from the market. Now coming to the levels in which the currencies are expected to swing in this particular week. Euro could come down to that 1.1050 and rise it to 1.1475 area during this week. If the volume is good, then the substantial rise is expected during this particular week. Then GBP could briefly come down to 1.3150 and then go to 1.36 area. Similarly, in the case of USD from 102 to 107, they are expected to jump. Then in the case of Swiss franc, from 0.9650, they are expected to go to 0.99 level. And last week, you would have noticed that from 99 level, they came down to 96 level, as I explained to you. And now they are expected to go back to this 99 level. And in the case of Canadian dollar, again, they are expected to make the wide range swing. So they could come down to 1.2950 area and then go up to 1.32 area. Then Australian dollar, slowly they are expected to gain the level from 75 to 78 area. So in all the currencies, the forecast is expecting the gains as a contrarian move. Euro GBP as well as the Euro GBP and Australian dollar gain will be USD negative move. Then if USD CHF and USD and also USD Canadian dollar, when they gain the level, it will be USD gaining move. So a mixed type of move is expected to happen alternatively in the market. As a result, you will come across that US dollar index may not show much of a significant move, but the players are expected to gain the levels in the case of all the currencies alternatively. If you got any doubt, you can ask me in the question and answer window, which is displayed here. I'll be able to see the question and answer to the questions. Now coming to that of the market trading. So I noted down the initial lows and the highs around 3:30 GMT on a daily basis. And then I compare it with it of the current market levels, because the players set the initial lows and the highs around 3:30 GMT in all 4 majors and 2 commodity pairs, and later on they try to either breach the high and go above or breach the low and go below, and that will give an indication for us what they intend to do during that particular day. Whether it is an intentional move on the downside or an extended move on the downside, we will be able to identify. Then accordingly, if it is an extended move, we can buy. If it is an intentional move, we can sell and then try to book profit decisively. In the case of Euro, 1.1166 is the low and high is 1.1184. They are not breached the low or the high. And in the case of GBP, 1.3201 is the low, 1.3272 is the high, They are not breached the low or the high, and they are staying in the middle level. In the case of euro, they are staying in the middle level as well. Then in the case of yen, 102.02 is the low, 102.69 is the high. They are not breached the low or the high and staying in the middle level. Then Swiss franc, 96.86 is the low, 96.98 is the high. They are not breached the low or the high, holding it flat. Then Canadian dollar, 1.3029 is the low. They just breached it by 1 pip. And 1.3062 is the high. And they just breached the low by 1 pip and started gaining. Now you find all the currencies are showing positive net change, but net change are very, very insignificant. So that shows that they are simply holding around that of the Friday close level, and they are trying to create the uncertainty to the traders. The traders will hesitate committing positions before the non-farm payroll, and the players will induce them to commit the positions, thinking that it is quite, there are 4 more days to go for non-farm payroll before the traders can take some position and close. So that is how they will create that impression and make the traders to get attracted towards trading and take positions. Then Australian dollar, 75.79 is the low, 76.15 is the high. They are not breached the low or the high. So in all the currencies, we have seen that they are not breached the low or the high, excepting Canadian dollar, wherein they have breached the low by 1 pip and come above that of the initial low and holding it. So not a significant move is seen at the moment, but they are expected to slowly make the moves in the market. It appears very sluggish. Now, these are all the recommended trades for today. We can keep the buy limit order near that of the low set for the day, 1 pip above that of the low. In the case of euro and GBP, and in the case of yen, we can keep in the middle level because the extreme low they may not show, and slowly they will gain the levels, and keep the exit orders as such, and also the hedge order 30 to 35 pips below the market positions. So as a result, when they show profit, buy positions, you can keep stop at entry and remove the hedge order, and then try to maximize the profit by making the stop as a trailing stop and keep the limit order. When they come closer to the limit order, you can move the limit order upward or the take profit order upward, so that the trailing stop will protect your minimal profit and you will be able to maximize the profit. Keep in mind that the players are known to make the swings, so you have to keep about 15 to 20 pips away from the market, the trailing stop in a profit making position, so that you will not be hurt vulnerably and you will be able to maximize the profit when they gain the level quickly. So watch that and try to trade accordingly. Now these are all the session timings. So for those of you who are not familiar with that, I'll just explain to you. The day is divided into 3 sessions. It's a 24-hour cycle. We follow the day using the GMT time frame. And it is divided into 3 sessions. And for convenience purpose, I am just calling it as a Japanese, European, and US session. You can call it as session 1, session 2, session 3 also. And in between, there is a naturally occurring gap time, because when the banks in this area close for the day, the banks in the other area close 30 minutes afterwards. And during that time, the official transactions, the currency conversion transactions which are going to take place during the morning hours of the bank, which will be around 9:30 a.m. locally. And before that, they will try to make some quick moves in the market and make some stop-ins. So this is what the players do for that of the online traders. They try to make the quick upward or the downward stops, depending upon the stops which are available in plenty. Then you come across each session is divided into three sessions, subsessions, namely the early Japanese session, mid Japanese session, and late Japanese session. The first 1 hour and 30 minutes will be the early session. The last 1 hour and 30 minutes will be the late session, and in between will be the mid session. During the early and the late session, they handle the majors. During that of the mid session, they handle the crosses. So if you want to trade in majors, take the position during the early session when they are making the swing, and close during that of the opposite session. So always keep in mind when they set around 2:30 or 3:30, the first, whether the low they are setting it or high they are setting it, you watch. Then you will be able to find out after setting the high, when they don't breach the high, they will make the slide. After setting the low, not breach the low in 1 hour, they will try to rise. So that way you can easily identify what they intend to do in this market and then take positions accordingly during the Japanese session and pick up some quick swing trade profits. And in between the day, after that of the US session, you come across 4 hours of gap time. So during that time, you don't come across big orders coming into the other market because the banks in US are closed as well as in Japan, Asia are also closed. And what happens during that particular time, the players make a very big upward or the downward move to hit the stops. And at that time only, you come across the overnight interest is charged around 20:30 GMT by the platforms. So at that time, they will make some quick volatile moves so that the traders having the positions carrying out to the next day become afraid and try to close the positions. That is why you find many of the traders become afraid that market might open with a gap and their equity may not be able to hold the position for such gap happening in the market. That is why they invariably close the positions by 20:30 GMT. But the players simply continue to make the move and start that move to the next day. If you notice it, in the case of Euro, they just only showed 2 pips positive net change when compared to the Friday close. So not a significant move, but there are certain days wherein they just moved in a very big way, like 100 pips or 40 pips and things like that. So that will give the fear to the traders. But if they use the hedge order to limit the risk and absolutely no fear, but still the traders develop the uncertainty from time to time and avoid holding the positions to book profit or maximize the profit. Instead, they only hold the loss making position, but not the profit making position. So if you got any question, you can ask me in the question answer window. I'll be willing to answer to those questions. And I'll come back on Friday and give you the review of the forecast, what I just given it now, and see how exactly the market has moved, either in tandem with it of the expected market moves or against, so that we will be able to review it. If there are any questions, kindly ask me. I'm willing to answer those questions. And these webinars are recorded, and the recordings of the webinars are available in a fixed rate and a live video show, and also in my blog, iknowindices.com/blog. You come across all the recorded webinars are available. It's the forecast sheet, so you can make a note of it. Okay. The USD closed at 102.08. What do you expect the USD in the coming days? Do we see lower lows? No. They just done it extreme move on Friday, and now they are expected to make they upward move straight away because they have done the extended downward stop, and for the month end and for the month beginning, they're already starting with that of the lower level. Probably they may just breach the low and go below occasionally by today or tomorrow, and later on they are expected to gain the levels in the case of USD. So downside is much limited in the case of USD. But when they are quickly making downward move, try to take buy positions. Once they stop cutting the new low for 30 minutes. See, normally the lower lows are derived theoretically with the help of the chart. But there is no hard and fast rule that the market should respect it. You have to keep it in mind. They are all nothing but the possibilities explained by the technical analysis. But the players make the moves depending upon the traders' pending positions. If already the traders are holding higher level sells and not willing to close it, say somebody has got 105 level sell and willing to close it around 97 level, so obviously they will just test his patience. So they will try to gain the level quickly so that he will come in a hurry to buy from the other market. So they know what positions the traders are holding. So normally if the traders are holding buy position, if it is making loss, some of the traders hold it. Many of the traders close it out of fear. That might be further continuation of the drop. So in such a situation, if the long holders are lesser in number, there is no point in dropping the market to take away their stops, because that will give the buy opportunity for the fresh traders. So they just balance it in such a way that when they drop, very few should buy, not majority should buy. Similarly, when they rise, very few should sell and majority should buy. That is how they make the moves in the market. So as I explained on Friday during the spike trade call, that after that of the US Q2 GDP, they made the upward spike in the case of Euro and GBP, and the downward move in the case of USD. And subsequently, you would have noticed during that of the US session, they simply booked a profit from that of 1.33, they dropped GBP to 1.32. Similarly, in the case of Euro, from 1.1196, they just dropped it to 1.1166. So that is how they quickly gain the level and dump the positions in the market. So all quick moves are with the different intentions. So they quickly rise to sell, they quickly drop to buy. That we need to understand. But when they do it so quickly, we become stunned. We do not know what is happening in the market. It takes some time for us to understand. But later on, we realized that, yeah, it was a great buy opportunity. But out of market fear, we failed to buy it. These are all the levels in which the currency is expected to swing. Is there any other question, please? Okay. By swing, you mean quick pullback. So swing is a move which happens. Say now they are making a middle level swing. The swing is nothing but the up and down move without breaching the high or the low. That is how they just make the swing. Either near that of the higher level for about 10 to 15 pips, upward and the downward move they make, or near that of the low, they make upward and the downward move they make. That is mainly to give the impression to the traders the market is alive. If they don't do that by circular trade, then immediately the traders will think that the market is not having much of a movement. So we call it as a momentum stock. When they quickly make up and down moves, then we call it as a momentum stock or momentum currencies. The volume is relatively high. That is how we presume. So for that, the players try to make the moves of that nature. That is referred as swing. Any other question, please? It's not actually pull back, so it will be just an up and down move near that of the high or near that of the low, depending upon the currencies we are focusing. Then if they want to make a swing and rise, then they will make the swing near that of the low and rise it up to that of the high or above. Swing and slide mean they will make just about 5-10 pips upward and then downward move near that of the high and slowly come down to that of the low towards the close of the session. Normally pullback refers to the of the retracement. Any other question, please? Okay. No question is coming. So let me. So these are all the recommended trades. You can keep the orders and find out how they are filling it today and then handle it accordingly using the hedge order to limit the risk. And you can also take the take profit order and use the trailing stop in a profit making position once the position start making profit and capture the profit. And you can move the take profit order away from the other market to maximize the profit. Okay. Then initial low on the high is of previous day, low high, no. Initial low on the high on a daily basis they set by 3:30 GMT. So daily initial low and high set between 2:30 and 3:30 GMT. The daily refers to today because in Japan already the date 1st of August started, but in US still it is 31st of July. But you have to follow the GMT time frame. Once the new day starts and the initial low and the high are set by 3:30 GMT. 2:30 they set the low, then high is set by 3:30. Or if 2:30 they set the high, then the low is set by 3:30. That's how they do it. So it is nothing to do with that of the previous day low and the high. Each day they set and they breach the high and go above. If it is an intentional move on the upside or an intentional move on the downside, they breach the low and go below. And if it is an extended move, quickly they will make a dip below that of the initial low, stay there for 2 hours, and then stop cutting the new low and go up, breach the high and continue to gain as an intentional move, alternate with that of the extended move. Is there any question? Okay. The shift in trading zone for the zone for Euro and GBP will continue this week. Therefore, we are expecting, shift in trading zone is expected to happen anytime from this week onwards in this month. They are expected to make a massive gain suddenly, and that could be a trigger for that from the market. And that it is a time for the shift in trading zone to happen in the market. So before that of the second week or so, suddenly you will come across the extended downward stop and followed by that of a quick rise. So how they have done it on Friday in the case of USD. And similarly, they will make one quick extended downward stop at any time in any one of the currency, either Euro or GBP, depending upon the number of longs held by the traders. Then later on, they will continue to gain the level and make the upward shift in trading zone. And this they will do it now before making the reversal in the market during the US election time, in the month of October, November. Any more questions, please? Okay. So I take this opportunity, thank FX Trade for the facilities provided to present the webinar, and you people for your patient listening of the webinar, and also trying to find out how exactly you can trade in the market, understanding the intentions of the player. And I'll come back on Friday and give the review of the forecast, what I have given it today, so that we'll be able to understand how dependable the forecast is. Wish you all happy trading. See you on Friday.